You know, when you think about the biggest purchases you make, your phone, a car, maybe even a house, the way we pay for these things is going through a massive shift. Seriously, the old rule book is pretty much out the window, and in its place, what we're seeing is this new financial trinity. So today, we're going to break down the three powerful models that are quietly reshaping pretty much all of modern commerce: rent-to-own, equated monthly installments, and account-to-account payments.
So what's the big problem we're even trying to solve here? Well, to put it simply, traditional finance is kind of like a hammer, and it's trying to fix every single problem. But you wouldn't use a hammer to fix a watch, right? Whether you're trying to get your hands on a new laptop, figuring out how to afford your first car, or just making a payment as efficiently as possible, a single one-size-fits-all financial tool just doesn't cut it anymore. We've really entered an era of specialization.
And this need for specialization gives us three really clear paths to explore. First up, there's the path to ownership. This is for getting what you need, right now. Then we have the path to affordability, for making those huge purchases feel a lot less scary. And finally, the path to efficiency, which is all about rewiring how money moves from point A to point B. So let's kick things off with that first path.
Okay, our first path, ownership, is all about building a bridge. Just imagine for a second you need a new computer for work, but maybe your credit score isn't quite there for a traditional loan. This is exactly where rent-to-own, or RTO, comes into play. It creates this flexible pathway for people who need access to essential stuff right away.
So how does RTO actually work? Well, it's a really clever hybrid model. You get all the flexibility of renting, but with this option to eventually own the item baked right in. It's all about getting you access to what you need today without having to drop a huge chunk of cash up front.
And the process itself? It's incredibly straightforward. It all starts with a rental agreement that clearly lays out your option to buy. From there, you just make your regular payments, and then, eventually, you get to a point where you can choose to make that final payment and, boom, it's yours. It's a really clear journey from renting to actually owning.
But there's always a trade-off, isn't there? It's a real balancing act. RTO is fantastic for getting you in the door and letting you try before you buy. Now, the flip side is that all that flexibility often means you'll pay a higher total cost in the long run, and you don't actually own it until that very last payment is made. So it really comes down to a choice: immediate access versus overall cost.
All right, let's switch gears and talk about our second path, affordability. Now, this isn't about renting something. This is for when you've already decided you're going to buy something big, like a car or even a house, and you just need to make it financially manageable. Welcome to the world of the equated monthly installment, or EMI.
You've probably come across EMI before. It's a classic for a reason. It basically takes a massive loan and carves it up into these identical, predictable monthly payments. Now, you might be thinking, hey, that sounds like buy now, pay later. But the key difference here is the scale. We're talking about much, much bigger purchases and longer time frames. It's a very structured way to finance major life purchases.
The real magic of EMI is its predictability, and it all comes down to this simple math. You take the total amount you borrowed, that's the principal. Add all the interest you'll pay, and then you just divide that by the number of months in your loan term. What do you get? The exact same payment every single month. No surprises. And that's exactly what you want when you're managing a big long-term budget.
So what's the trade-off with EMI? Well, it's a little different from RTO. On the plus side, it gives you the power to buy things you just couldn't afford otherwise, and it's great for building your credit history. The catch? The interest. Over the years, that can really add up. Plus, you're locked into a pretty rigid payment plan. So yeah, it's a fantastic tool, but it's a serious commitment you've got to be ready for. Okay, our third and final path is, honestly, maybe the most revolutionary of them all. This isn't just another way for you to buy something. This is about completely overhauling the hidden plumbing of our entire financial system. This is the path to efficiency, and it's all driven by something called account-to-account payments, or A2A. The idea behind A2A is just beautifully simple. It's about creating a direct digital highway for your money. So instead of your payment bouncing through all those complicated and expensive toll roads run by credit card networks, it goes straight from your bank account to the sellers. The whole goal here is to cut out all those middlemen.
And you can really see the difference right here. On one side, you've got this tangled web of the old card networks. On the other, you have the clean, direct path of A2A. For any business owner watching this, you know this is a total game changer. It means lower fees and a much, much simpler way to get paid.
But of course, there's another trade-off. A2A is an absolute dream for merchants. It's cheaper, it's faster, it's more secure. The big challenge, though?
it doesn't yet have the same safety nets for us consumers like the chargeback protections we're also used to with our credit cards. It's really a classic battle, the raw efficiency of the new system versus the trusted security of the old one. So the huge takeaway here is that these three models, RTO, EMI, and A2A, they aren't fighting each other for the top spot. Think of them like a specialized set of tools. You wouldn't use a hammer to turn a screw, right? Each one is built for a very specific job in our new, modern financial toolkit.
Let's just lay it all out, side by side. You've got RTO, which is all about solving the access problem for people who need things now. Then there's EMI, which solves the affordability problem for those making big, planned purchases. And finally, A2A tackles the efficiency problem for businesses that are just tired of paying high card fees. Three totally distinct problems, all met with three highly specialized solutions.
And that really brings us to the core idea. The future of finance isn't one size fits all, it's a specialized toolkit. And look, if you remember anything from this, remember this right here. RTO is about access, EMI is about scale, and A2A is about infrastructure. Each one plays a unique and totally vital role.
So as these tools become a bigger and bigger part of our everyday lives, the real question isn't which one is the best. The question is for you. Whether you're a consumer or a business owner, now that you know the toolkit, which one of these tools is going to solve your next problem?